Good afternoon and welcome to Markets Today. This week continues with the turmoil, with global stocks coming even lower than they closed last week. What has been happening since our last discussion with you? A couple of things. The Fed injected a couple of billions into the market, indicating that it will be continued buyer of bonds. In other words, its quantitative easing measures are expected to mitigate the pullback on demand in the U.S. market, especially on the back of coronavirus. Where do we stand on this coronavirus? We have seen a couple of updates, at least from countries such as China and other countries that are out there and have high infection rates. It's indicated that China has actually started closing down its coronavirus facility because it's not taking in any more patients. It looks like we have almost gotten to a point of where we are understanding where this pandemic is, and there is a possibility of a virus coming out anytime soon. What is happening in Kenya? We have seen 3 reported and confirmed cases of the virus, and on the back of this, His Excellency President Uhuru Kenyatta has directed all the educational facilities to close. Earlier in the week on Monday, we did see the primary day schools closing as well as the secondary day schools. We expect the boarding schools to close by Wednesday and the tertiary institutions to close by Friday of this week. The most important corporate news that we had from His Excellency's speech was in regards to the cost of mobile money transactions. He did mention specifically the use of M-Pesa and encouraged the population to use more of mobile money as opposed to handling cash, because the incidence of handling cash and the incidence of handling cash increases the incidence of contracting coronavirus. In that regard, we have seen Safaricom, which is the country's top mobile phone provider as well as mobile money transactions provider, cut back on the cost for any transactions valued at less than 1,000 shillings. Safaricom has also gone over and above and increased the cash daily limits from a limit of 140,000 to nearly 300,000. Now, this is positive, and we do expect a lot of transactions to happen, given the fact that the bulk of the transactions in this economy are in the informal sector, and they tend to be below 1,000 shillings per transaction. So we do expect a bit of volume there. But in as much as there is volume, Safaricom is giving up any revenue associated with that, and this could have a bit of a negative impact in as far as the revenues from this platform is concerned. Stepping aside from this corporate news and coronavirus updates, what is happening when we are looking at stocks? Well, globally, we continue to see U.S. stocks hitting a limit down. Yesterday, there was a halt in the markets, the third one in less than a week that we have seen in these markets, as the companies are crashing as investor sentiment is continuing to be negative. This has not abated the case for the Nairobi Securities Exchange. This is a stock market that is 70% foreign traded. The key stocks that are affected by any universal tank in sentiment tend to be Safaricom, KCB, Equity Bank, Cooperative Bank, EABL, and BAT. Yesterday, Safaricom, we did see it trade at between 24 and 25 shillings. This is a stock that had touched a high of 33 in the beginning of the year, sometime in January. It's been less than 2 months, and now it's at 24 and 25. Nothing has materially changed fundamentally, but there has been a global switch in terms of sentiment that has punished this particular stock. KCB, which announced full-year results last week, has also taken a punt, and we have seen the stock trade at between 39 and 42 shillings per share, and that was at yesterday's close. Equity Bank has not been spared either. It is trading at 39 shillings per share, and Cooperative Bank is at 12.8 shillings per share. Now, EABL and BAT have actually suffered slightly more compared to their peers in terms of the large cap and the blue chips. We have seen EABL yesterday trade at the level of 180 per share, and we have seen BAT come down to a level of 400 shillings per share. Today's market is nothing short of what we saw yesterday. Just before we came to the opening of this show, we did look at Safaricom. 11 million shares had traded. There's just no demand at the 25 shilling mark. Supply is priced at 25.5. The best demand levels we have seen are at 24.5. What do we make of all of this? Yes, coronavirus pandemic is beginning to seem as though it's going to be stabilized in terms of how different countries and health authorities are managing this pandemic. But over and above that, there is the global slowdown in terms of demand for products and or services, and this will have a direct fundamental impact on the companies. That said, we do expect the continued downturn on the NSE to continue at least this week and maybe for a couple of weeks until we get a bit of stability, at least in Kenya. It could be that the worst has come to an end in some countries such as China, but it does seem, at least for Kenya, the worst is just beginning. If you are a buyer of stocks, it seems now is not the right time to buy because we expect to see continued sell-offs on the NSE, at least for the blue chip counters, the top 5 or 6 or 7 names. That's Safaricom, Equity, KCB, Cooperative Bank, BAT, and EABL. If you are looking to buy, our advice to you would be continuously look out for the prices and try and see at what point investor sentiment sort of tapers off so that you can get a good entry point. The second thing we'll be looking at is the fundamentals of these companies. At least for Safaricom, the usability, or rather the use case of the bulk of their products still remains. So we don't see a material impact on the fundamentals of this company. For some of the other companies, especially in the manufacturing sector, the jury is out on that. But as always, this is the place to be so that if anything happens in as far as these companies are concerned, we will keep you guided on what to expect next. A lot of talk about the NSE. Let's circle back and see what is happening on the ground in terms of corporate actions you need to look out for this week. We have Standard Chartered and Cooperative Bank that are due to announce their full year 2019 numbers. These announcements are due this week on Thursday. Keep it here for Metropole TV. We will be covering these events live and sharing their commentary as well as the one-on-ones with the C-suite executives in this company. Engage with us on our Twitter page, that is Metropole TV and Mbithe Mwema. This is what I want to know from you. Are you a buyer of any asset class? Have you made money in any asset class? At least what we can say as we come to the end of this segment is the price of stocks is coming down, the price for global commodities is coming down, the price for oil is coming down. But guess what? The price of sanitizer keeps going up. Have you been selling some, or have you been engaging in any business activity that has made you a good return over the last 1 week? I'd really like to hear your thoughts. We take a short break. When we come back, we've been taking a one-on-one conversation and taking a deep dive into the different industries in this economy. This week, we want to turn our eyes and our gaze into the insurance sector to understand what are the up-and-coming digital trends in this space. And we are joined by the team at Resolution Health to understand the trends as well as their product offering so that you can know if you are making an investment or if you're looking to mitigate your risk, how would you be able to partner with this company in question. We take a short break and we will see you shortly.